So Bo, let's start with Facebook. You made waves recently where you came out and basically said, look, Twitter and Facebook, everyone's excited about them, millions and millions of users, but they're always going to be crappy businesses. Talk about why.
Well, I think people should be excited about them because they're fantastic products. And I made the point that the world is a better place with those two products. But I think as businesses, they're difficult. And I saw this back when we had Tripod. You know, whenever you have a communications platform where you have people communicating with one another, it's difficult to monetize. You know, people aren't in a commercial mindset when they're talking to one another. And so I think, you know, the Facebook story of $100 million a month of revenue, I mean, maybe they have that, but they have 500 million users. If you have 500 million users and all you have is 100 million a month in revenue, I mean, where do you go from there? You know.
And so the bull story would be Facebook, like Google, spent the first however many years just building up the user base and the product. Then they said, okay, it's time to monetize. Let's start to fill it in. So Google went from a huge search engine with no revenue to suddenly this absolute monster. And people think it's the same thing with Facebook, is that they're just starting to monetize it.
Yeah, I do. I think it's similar, and they're on similar paths. But the fact is that the Google inventory is worth a lot more. You know, it's a static page, basically, that when you do a search, you know, you get a page that doesn't change. It's somebody looking for information. They're in a mode of trying to find something, not find people, typically. And the inventory is proven to be worth, you know, $8, $9, $10 per 1,000 pages, whereas on Facebook, you know, they're doing the same thing, lots of users, and now they're starting to monetize, but the beginning of their monetization is starting at such a lower rate than Google's did when it started. You know, their average, you know, eCPMs are in the cents. So I just, you know, similar stories, which I agree with, but I just don't think fundamentally the inventory is that valuable on Facebook.
And so you say this even though they have this incredible super targeting ability where I can search through Harvard Business School graduates and find the 15 who are in Cambridge and just advertise to them?
Yeah, like I said, you know, if those people were looking for information about your product, then that would be a good venue to advertise to them, but they're not. They're having conversations with other Harvard Business School graduates or their family and just lobbing in ads at them. You can do it, and it's fine, but it just produces very low response rates, which that's what we know advertising on the internet's about. That's always been the promise. And the low response rate mean low margins.
And then how about other models, like payments? Everyone's incredibly excited about that.
Yeah, virtual goods, you know, payments. I mean, I think all of it's possible, you know, but it feels to me like it's all very nascent. And I'm not saying Facebook isn't an interesting and valuable business, but the $25 billion valuation that's been placed on it in the private markets, I mean, have we seen this movie before? All of these businesses are getting these huge valuations before anybody really understands what the economics and margin characteristics of the businesses are. And I would say if you look at the current revenue picture, it doesn't look that good from a margin perspective. Facebook has some value. The question is, how much value? And I think the markets, once again, are way ahead of themselves.
And any sense of what you think that value should be?
You know, I think if they're doing $100 million a month, you know,
1.2 billion
yeah,
a year.
You know, we don't know what the margins are, but you know, maybe it's worth $4 or $5 billion. You know, a 4 or 5 times revenue is a reasonable multiple that, you know, some of the better digital media companies are getting. I think, you know, 4 or 5, maybe $6 billion is a reasonable value if they're doing the $100 million a month in revenue that they claim to be doing.
And so, last question, quickly, thoughts on Twitter, which has finally just rolled out its own?
I think Twitter. I love Twitter. I mean, it's a fantastic news aggregation service. It's a great way to keep in touch with people. Again, I just think it's short, you know, communications between people. You know, I don't think that's a very good place for advertising. I think will be proven out, you know, when they start adding ads, as they've announced that they will. I think what they'll find is that, sure, some people will click on the ads, but I think the overall, you know, eCPMs will be low, and that means they're just going to have to get to the place where, you know, will 500 million people use Twitter? Well, maybe, but even if it follows the same trajectory as Facebook, and I don't think it will because it's not as rich a service in terms of its communications platform, you know, I still think that the market is ahead of itself in terms of what it's worth. And the thing that worries me about this is that these are such valuable things. You know, I mean, you know, I watched the first generation of these social networking services like Tripod and GeoCities go away because the market got way ahead of itself, the companies that acquired those companies couldn't turn the reality of the business into what they had paid for them, and they shut them down. And that's too bad. I would hate to see something like Facebook or Twitter go that direction, because the world does need these things, much more so than they need the content companies that I invest in, but I think their sort of political and social value is actually greater than their economic value.